The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Wednesday, the 10th of December, Fed Day this afternoon between 2 and 3. It's going to be very important. But in fact, let me do this. I want to show you, I'll get to it in a moment. Yeah, let me just run the numbers. The Dow is up 96 at 47,656. Selling came in early, and now the market's stabilizing nicely. I suspect that there'll be a kind of a whipsaw. Talk about whipsaw. Just look at this action here. We haven't seen this for a little while. Look at this. Went to a peak E in the 10-minute chart from the triple bottom down here. That was at about 2020. That's 10:20 last night, and then runs up peak E, pulls back quite sharply, then goes with a higher low. It starts and goes to right over the 200-period moving average to a peak D. This is the 10-minute E-mini. And then for about eight measures. It's not music, sorry. This is for 8 bars. Yep, still could be music. Anyways, 10 candles, 10-minute candles. We've tagged 1, 2, 3, 4, 5, 6, 7 out of 8 candles. 7 times it tagged the 200-period moving average before declining sharply, and it goes from about the 68, almost 60 level down to the 68.34, and then it rallies very sharply, very sharp, big rectangle, takes out the bottom of the rectangle, and now it's trying to work its way towards the 200-period moving average of 68.53. I think it will tag it. In fact, we could even go to the top of the rectangle, but probably as we get closer to like 1:30 this afternoon, we will see the market narrow, and then we'll see it take off or take out either intraday highs or lows after the Fed book is just declared, whatever it is that they say. We'll be watching it very closely. Actually, I won't be watching it. Unfortunately, I have to be out from 1:30 to about 2:45 or 3 o'clock. Just amazing how that happens. Anyway, I found that whatever the Fed does, you can always rely on the fact that the following day you probably could have done whatever. If you're going to go short or go long, the very next day you're getting just as good an opportunity. So let me just finish this up here that we got, and then I'll try to get to that chart. We're going to go to so the Dow is up 111, very nice action, considering there's a little nervousness out there. The S&P finally is up just a point. There it is, up 2 points at 68.42. Look, the 9-period, everything about, if there wasn't the Fed today, I would have said we're anticipating probably this week a leg C in the Dow and the S&P, and for the S&P it would be above the high of 4 days ago, which was 4 sessions ago, 68.95.78.79 starts leg C. The IWM, let's go to the QQQ. That was in leg A, peak A, that is. And what we're looking at is 1 penny above 90.93 starts your leg B. I don't see any reason why we shouldn't get there. Well, there's a reason. Something could happen with the Fed, but so far, just technically, look at this beautiful action in the IWM, the Russell 2000 ETF, even with the higher yields. You remember we were looking at it and saying, well, if yields come down, it usually helps a lot of the small caps. Well, in fact, the yields have been going up, and yet this has been a monster. Look at this, from 228.90 back on the 20th of November. Here we are, trading at 251. The all-time high was made at 252.77 on the 15th of October. Well, we nicked it yesterday. Even we were a higher high. We went to 252.95. That starts a brand new. That is a confirmation that we're in a new buy mode in the daily chart. The weekly chart, yep, leg F, but it had an instant restart. It could be an F/B, but I don't even have to go there right now. We have to do one thing at a time. It's the daily charts that are really important. Now, just look at this. The SMHs, the semiconductors. How important are the semiconductors? Very, very important. Where the semis go, the general market tends to go. I've been saying that for about 20 years now or more. All I can say is that At this point, down 24 cents at 368.76. If by 4 o'clock this afternoon it is down to the 365 level, that's a little bit of a problem. Not much, but a little bit of a problem. If it's deeper than that by Friday, that becomes a little bit more of a problem. But if it breaks to a new high of 372.79, 1 penny above the October 29th high, at any time this week, that's going to be fabulous action. And that would start a leg B in the monthly chart. Let's now go to GDX. I had questions about the GDX. The GDX is very interesting. Look, this is the gold miners ETF. It's made a peak C1, C2. That's the equivalent of a Chapman wave peak D. And it could go higher, but at this particular point, the 9-period moving average is way above the 14. It's holding very nicely, but you haven't really seen that kind of response in gold. But the action is all in the upper third of this large rectangle. And what I am looking at here is that the high that was made at 85.09 back on the 16th of October, I think that that's going to be tackled at some point in a couple of weeks to come. It could be sooner than that. But most importantly, if it takes out 78 support, you could go sideways. Not you. The GDX could go sideways for longer. Now, I do want to show you the silver. Now, look at this. This is interesting. Look, silver is now up 13 cents at 60.97. If you look at the SIL, this is the silver gold. This is the Global X Silver Miners ETF. Now, what's fascinating about this is that it hasn't gone to a new high. Silver is at an all-time high. So I've got this in the monthly chart as F because it's got an instant restart. It has to be called F/C, F/B, sorry, F/B. There it is. Look, F/B. That means the next one up will be probably a G/C if it goes there, 1 penny above. Well, it's a silver miners ETF, so I have to go to this high right here, and that's the high of the 16th of October at 80.72. You got an 80.73 on this particular index. Not only is that possible double top in the weekly chart, but how it breaks through is going to be important, and how it pulls back, because it's got tremendous support, 78.10 right now, 74 to 72 is very strong support. So that's silver. I said I'd get to the high-grade copper, right? High-grade copper is now 0.03. It's up a fraction, but it made this peak F top. I think it's going to digest just a little bit longer. We'll see. By the end of the day, you could see copper moving higher if everything works out. But now, this is the very important thing that I'm looking at here. If you put the whole potpourri together, what is most important? Look, here's the TLT. Up 30 cents at 88.28. This is the iShares 20-year Treasury bond ETF. They have bonds of a greater duration, up to 30, but it's called the 20-year Treasury bond ETF. So you see it made a peak E and is pulling back in the weekly chart. That 9-period moving average is so close to turning down in the weekly, but it hasn't. Now look at the TVT. The TVT is not that close to crossing positive in the weekly chart. So I'm going to be watching this very closely because, well, I don't want to rush it. When we get back, we'll talk about it, and then I'll get the chart up that I wanted to show you. I haven't looked at it for a while, so it's going to be very interesting. Be back in a moment. Dow's up 133. Basil Chapman, Tiger Technicians Hour. I've got my webinar coming up on Tuesday.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Yeah, so this is the chart I wanted to show. I used to show this to my subscribers every single week when I did my overview. And then I said, you know what? I've got so many other things to do. It's easy just to spell it out, just to say it. But I like you to see it. So look, here is the 30-year T-bond, which is white. The TYX. The brown is the TNX, the 10-year T-note. This is the yield, right? And this is the 5-year T-note yield, the FVX, the cyan one right there. Look, this is actually one of the greatest distances we've had between them since we go back to 2021 into 2022. Mostly, it was very tight. Look at this peak D in the 30-year right there. And that was, let's call it... around about October of 2023, right? But ever since then, besides this lightning bolt pattern right down here, coming A to B equals C to D, got nothing to do with Chapman Wave peaks or troughs, what happened is it came back, and I drew this in ages ago. Now, let me just show you. I'll do this right now. This is where we are in the 30 years. So this is kind of high. If I'm able to do that, I don't want to mess with this chart. All right, I will. Yeah, we've been here before. Look at this. This goes back to 2007. It actually goes back before. But look, this green line is where I put this in. And I said, look, don't worry, we've been here before and the market's managed. Well, let's just do this. Yeah, I'll mess with it. Okay, right there. That's the 30-year. We've been there not many times in the last 10 years, 7 years, 8 years, but we had been there before, right? So that is different. But look where the cyan one is. The cyan one, I see I have two ones here. Okay, this one here, this is the 5-year. And let's just go to the 10-year. The 10-year, we haven't been there for a while, but we had been there, and the market, kind of survived. So all I wanted to say is I wanted to show you this to put into perspective the fact that we have been in this area before. The market survived. Other things happened, but it's not the end of the world. That's really what I wanted to say. not the end of the world. And if you look at this as wood, the iShares Global Timber and Forestry ETF made the dreaded H pattern, peak A, peak C, D, E, and then it's A, B, C, D, E, F, and then it pulled back sharply, but it's held the left side low. That's a good sign. That's the Global Timber and Forestry ETF. But here is the HGX, the Philadelphia Housing Index. It's making, I wouldn't say higher highs and higher lows, but it is holding very nicely after the most recent pullback and rally. So it did make highs back in 2024. So it's been down and then up, and now it's sort of choppy towards the lower end. I'm just watching this. Okay. All I'm saying is that what I'm looking at on the technical side for the positions that we have, and we've added quite a lot of positions, and I've got a webinar coming up on Tuesday. Now, I should say that if you're interested in my newsletter, I would do it as soon as possible, because every day we held off the last 2-3 days, but whatever happens today, we're going to be back very soon putting positions before Tuesday. That means you won't get anything until Wednesday night if you sign up for Tuesday. I'm already putting those positions on. And the whole reason why I'm doing a webinar that basically says the outlook for 2026 and what looks good going into the new year. And why I wanted to do this is that we've had a kind of a rotation, and you can see the rotation. Let me show you. I'd like to get out of this because I'd like to go to the futures. Exit, let's go, close, workspace, save workspace. Save workspace, yes. And now I want to, just for the moment, if you don't mind, I'm just going to go back to my futures chart. I always like to have that ready because we stuck in a range. I want to see what happens, how we break out of it. And then I've got a lot of questions that I need to get to. But most importantly, let me say that within the context of where we are, it's kind of selective. Look, out of the biggies, out of these really big ones, look at this. Here's Microsoft. We still own Microsoft and way, way lower down. Haven't added to it because it's been so choppy. Looks good, then looks bad, looks good, looks bad. Now it doesn't look so good. Look at the weekly chart. It pulled back today in this H pattern. It hit 553.72 with a round number 550 open. When I do my webinar, I'll discuss how I look at round numbers, how I look at these double tops. Look at this, 555.5, 555.45. The week of the 1st of August pulls back to the 14-period moving average. How important is that? Well, the 9 was over the 4, and it was really good. Well, it said you could have a good balance. What you did, you went to a double top at 553.72, and that was back in end of October, beginning of November. Now look what's happened. The 9-period moving average has gone negative. So what I'm saying is that this is a very select rally. And GE should be participating in this particular phase. And here, look at GE, down at lows, recent lows, double top, 316.53. A week later, 316.67. Kapoop, that's it. And trying to make a double bottom, it didn't, and it's looking very weak. Will the 9-period moving average turn lower? We'll see. So I'm saying that this is really select. So we've managed to get positions that have given us a little bit of at least a little bit of a leeway from where we got in over the last week or so to where we are right now. So if the Fed comes out, all of a sudden everything tanks and the Dow's down more than 350 points, that's going to be negative. If it holds well, or by Thursday it's already up 150 from the close of yesterday or more, that's going to be really nice action. So it's very select right now. So I want you to do that, and I want you to look at this. We own Bank of America. Look, Bank of America holding very nicely towards the upper range, and JP Morgan, one of the leaders, suddenly is an unleader. Look at that. Down sharply from the most recent all-time high. It's up in the 320s, and all of a sudden, bam, it's below 300 today. It went to 298.46. Now it's running quite nicely. So, and look at the weekly chart, still fabulous. So I'm saying this is a very good time to be looking at positions that you get into, have a good leeway if there's some shakiness from the moment that you got them. I think it's good. Look, for instance, we've got the IWM, the Russell 2000. And it's doing very nicely. It's kind of leading right now. I would have liked to have got it much lower down. I talked about it, but I didn't do it. I got it a little higher up. So we don't have quite the wiggle room, but we do have some wiggle room. And that's the way you want it. You want to get in so that the market moves in. the price of whatever it is that you got into moves in your favor, and then you've got a cushion when it gets to that little shakiness. All right, I'm going to go to the next thing that I want to look at here. So I wanted to show you this. In the Bitcoin went to a peak D, but look at that, 80,750 to the 95,000. Don't know if it hit it, 94,950. Peak A, peak B, peak C, and peak D. That's not the way you want it. Look at the weekly chart, 79,630 back in the beginning of April. Peak A, huge A, goes all the way to 113,000, pull back, and then it goes peak B, peak C, peak D at 127,750. That's a D. This is pathetic. So something's not right. Ethereum did a little bit better, leg D, just a little bit better at the 200 period moving average. I have to tell you, to see these things really take the next phase on the, not the next leg, but the next phase to the upside. Ethereum needs to be at 34.50 to 36.20. Then I'm going to say to you, hey, that's a much better move. I'll be back in a moment. Dow's up 129. S&P's unchanged. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
So we're back and we're looking at the peak D. Remember, the fourth highest peak in the Chapman is where you start to say, okay, a little caution here, things can happen. Well, that happened just above the 200-period moving average back at about 3:30 this morning, Eastern Time. Peak D, and look at this. We've got a peak D right now, the 1-minute chart. So these are things that I'd like to take note of. We'll be discussing that in the webinar coming up. But we're mostly looking at in a sector rotation. You remember I was just showing you those Dow charts. What is basically working? What is not working? For instance, 2026 will start a new year. That means the whole season of the shopping season, Christmas season, holiday season in Walmart could be done. Is that it? Walmart, retail box, all-time high as we're speaking right now, 116.23. What's going to happen next? Well, if you look at the various, and this is this rotation that's going through different parts of the industry. Look at Costco. Costco is down towards its lows, double bottom at 871.71 back in April. Then it screams up to the 1060s. Then what does it do? It comes back, and now it's testing at 873.97 was the most recent low. It's trading at 885.30. So those are the differences that I want you to be looking at. And my question has always been, what on earth is going on when you've got a Ford looking kind of, look at this historically. Let me just open this up a little bit. Ford is struggling. It had 25.22 January of 2022, and it's just been in this long, you remember, long rectangle formation can last a lot longer than your patience. Well, this is going to have to be 2026. It's going to have to be the move that it takes it into a whole new area of 1650 or higher, right? It hasn't done that for a long time. Wait a minute. What about General Motors? All-time high, as we're speaking, all-time high, 78.17, 78.41. We've been along for quite some time here. This is what's going on, right? General Motors, this is a deep cyclical, interest rates, everything. I think it's because they have fewer electric vehicles. I'm just guessing. And everything I read about the Cadillac, Consumer Reports never gives it a good write-up at all. And it's a very expensive car. And I can wonder about, I've been saying, why isn't Baha, what's the name with the B? Why isn't she really made quality the thing? Quality, that's what you want. Anyway, I'm not going to go into that, but General Motors is doing very, very well, all-time highs. So this is the whole thing that I'm looking at. So let's go to electric. Tesla right now is trading down 21 cents. It's unchanged. It's in the trading range or the upper part of this big rectangle formation, making a cup, a lopsided cup that goes to a D, just under, right on, or just above the previous high. Well, the previous high was a peak D at 488.54 back in, I think it was December of 2024, plummets down to 240, and that really was a plummet on the 11th of the week of the April the 11th, 2025, and it goes peak A, then a B, and a C, and it goes to a D. Where? 474.07, just under the previous high, and now it's digesting those gains, but it's doing still quite nicely. And then if you go to, what was it, XPEV, Spring. Look at this. Makes a most recent high up in the 28s. It's down in the 19s at the 200-period moving average. And that's what I'm saying, that this is a period that you've got to be very selective. I've done my absolute best to try to be as selective as possible for subscribers. I just don't know if it's going to work out. It's worked out very nicely so far. You can say you hope it continues, but we've done the homework, and it should continue. And if it doesn't, at least we've done the homework, and there must be other reasons why it's not working. But so far, it's done very nicely. So we're going to be looking at sector rotation, certain stocks, ETFs. We can go into anything. You remember, we were in the DBA forever, for a couple of years, in fact. DBA is the agricultural fund. We haven't been in for a long time, but we're unafraid to go anywhere. It's just sideways. Let's see what DBC is doing. DBC, that has more of the crude oil, etc. Still not very much. So we're prepared to go anywhere. What I am looking at, what do I want to do? ROBT. We've not been in this. We're in it a long time ago. I haven't been in it for ages. This is First Trust NQ AI and robotic ETF. I think this is an area that has a very good potential for 2026. Do I want to go into a specific stock, or do I want to go into this conglomerate and make it easy? We've done that in certain aspects. We've gone into the individual, and we've also got ETFs. I have no problem with that. I would say IWM is an ETF, right? And I have no problem with that because it's a longer-term outlook. I have many subscribers who don't want to get something that they feel has tremendous potential, and they want to be able to sleep at night. And I think that this might provide that. I don't know if iRobot, is that what it is? ROBT, if they can provide that, but maybe it could. All right. So I'm looking at a lot of different things, and I'm saying what happens over the next, going to Friday's close is going to be very important. Look at FXI. This is the China large cap ETF. I'd said this looks to me like it's in the lower range. Look at that rectangle. It's got the lowercase h that goes to a lowercase m very often if it's successful and tries to bounce. It's already done its peak D in the monthly chart, so it can take a bit of a rest. The last move was a peak D right there with an arch formation. I drew it as a rectangle, but actually it's an arch, and I'll be doing these patterns and talking about them. I have webinars. If you become a subscriber, you have plenty of webinars where I discuss these very things, the arch formation, how the arch can go into a lowercase m, what happens when you start to make low lows and you come out of the rectangle, etc. And this is the the FXI. So FXI looking quite weak right now in terms of daily chart. Monthly chart is just weekly chart is in a holding position, and the monthly chart has a peak D with still pretty darn good technical, so that should rally in 2026. Then I also want to talk about easy techniques. Look at this. Easy techniques. I've got, before I do the easy techniques, let me go back here. Question came in, could I look at SYM? This is one we still have. Symbiotic Inc., end-to-end AI robotic warehouse and automation systems. We've taken very nice profits on the way up, all the way up to the highs. And then we've just waited now. It's pulled back. We're in the 22s. It hit 87.88. It's trading at 60.60. And the question came in, is this ready for an add to or a new entry? And my answer is, please wait just a little bit. I don't mind paying up. I don't want to pay down. So give it another day or two. We'll talk about it, because if it's going to work, it's going to have to work by the end of December. This has to be back at 72 or higher, and it's at 60 right now. Symbolic SYM. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I'm going to go back, so now we're just going to have to rush through these questions. Let me just write them down. Let's see. R-I-V-N. Okay, as far as GM is concerned, Mary Barra is scaling back aggressive EV targets, shifting from an all-electric future by 2035 to a balanced approach, focusing more on profitable gas hybrid, I love the gas hybrid idea, vehicles, as EV demand slows and incentives wane, leading to reduced production targets, factory adjustments, and a pragmatic pivot to meet current market realities rather than rigid blah, blah, blah. Okay, good. So we now understand that. Next question came in. Let's go start all the way up. So symbolic, just hold off. If it's at 59.97, down 2.20 today. If it goes under 56, that's a problem. This is going to be an Eiffel Tower, straight up, straight down, peak A. I'm watching this closely. Now, this is the pattern right here, is that what could happen to the monthly charts of the Dow and the S&P with those big single leg A. They could fail and have a brand new ABCD underneath the previous high. I don't know if that's going to happen. All right, next thing is UPS. So UPS, this is very interesting because this is part of the economy, right? Look at that monthly chart, low lows, low highs, low lows, low highs, down, 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 down. And it goes all the way from the almost 200 level to about 82. Well, look at the weekly chart. This is a peak C, and yeah, I can put that in as an up arrow. That is in a buy mode. The monthly chart is in a buy mode, and it targets this whole ugly red candle. It targets the top of the rectangle by January, and that would be to 103.37. It's trading at 98.57. What's happened is in the daily chart, we've got a brand new ABCD. This is another leg D. So that's a failure pattern right there. Dreaded H went under it. So okay, I like it very much. I suspect that UPS at the 200 period moving average, every time it's got there, it's failed. So this is going to be important. So what you want to see, first of all, there is a lot of support in the 90. It's at 98.53. Between 90, if it goes under 94, that's a problem. But if it holds 95.80 or higher on any pullback, that's a good sign after a peak D. It hasn't made it, it's a leg D. If at any point in December, it just has to tag it once, 102.20, just to get into the 120. It doesn't have to close there. That changes a lot of things because what that's done is gone to a leg D in the weekly chart, and then we'll see how it's able to tackle the top part of that big red ugly candle. So yes, I do like it, but I don't know how much more before it has a deeper pullback But I do see it positive right now. That's it. Next question about UUU, 1, 2, 3, 4. No, that's not you. That's UUU. Trading right now down $1.08. I watch these very closely because you know that UVC was on my list forever because we had fabulous profits twice, and they're not so good the very last time. And so UU is Energy Fuels Inc. I'm going to say hold off. And I personally, for the subscribers to the opening call, I held off, even though it had UEC, which is Uranium Energy Corporation, had a really nice rally. Just give it a moment. I need to see how this weekly M-shaped pattern in the stochastic, in the 914, is able to get a new recovery high. If UEC happens to tackle 14.83 or higher in next week, let's say, I like it. Then that's the one that I prefer. So that was your question, and that's the answer. Rivian, R-I-V-I-N, R-I-V-N. Man, they lose money, huh? But look at the price. It's up 64 cents at 18.34. Oh, I used to have this notated. So look at first of all, I always do this. I grab the outer wicks, and I say, there it is. This is your monthly chart. It needs to clear that candle right there. That's the candle of July of 2024 with a high of 18.86. Today's high is 18.41. Very nice. So if it's able to do that, clear it, I close above it. I shouldn't say clear it. I want it to close above. And then this ugly candle of January of 2024 from 21.94 to 14.59, that becomes in play. All right, so this is peak A. Let me just show you. This is Chapman Wave methodology. I'll do some of these. I won't have time to do too many for the 90 minutes of my webinar on Tuesday, but I will show, for those of you who are new to my work, I'll show you something. But you should, if you're listening to this program, you should not be new to my work because I've only done it here, let's see, for 23 years, times maybe 100 or so a year, 100 or so a year. No, it's more than that. No, way more than that, 365. 1,000 a year. So maybe 20,000. You should have a little bit of an inkling of the Chapman Wave methodology. So this is peak A, B, C. Underneath it goes, there's an A, but it's an A minus, and there's an A. That's good. And this becomes a D. So what happens to all these little ones don't count because the major one is C. You want to get to a D, and you got to a D. What happened next is you drop sharply, and you started a brand new A, B, C. So Rivian loves the Chapman Wave methodology because it goes to Ds when it gets to a buy mode. Then it has a pullback. That's right where we are right now. But in this particular instance, I'm going to that low bar. You always have to go to the lowest low bar, start your count. There it is, A, B. Under it is another A. Why is that an A? And that a B? Because this is your starting point right here. Every peak gets counted. Okay, what have we got? We've got A, B, C, D. So that's not B to C. It's underneath it. A, gray B, gray C. And suddenly you got yourself a D right here, and the technicals are still strong. Rivian's looking very good. Good eye, Fletch. Good eye, good eye, good eye. But all I can say is treat it with respect, that it's done very well going into the end of the year for an auto company. That's a very important thing because how it comes out in that tough time of January, February is going to be important. But the 9 is over the 14. The MACD is good. Stochastics at 84%. On-balance volume is good. Weekly chart, very same thing except the stochastic 72. I'd like it over 80%. But this is very nice for the breakout. Now, in a rectangle formation, once you leave your rectangle, you very often can look at it and say, that's like a bowl formation. Look at this. Just a flat bowl formation. Finally, it breaks out. It says goodbye. And that's going to be very important. So Rivian Auto Company, Electric Auto Company, Rivian Automotive, I like it very much right here. It would have been nicer at 16, and now you're at 18, 30.32. But it's looking good. The question was, yes, it's looking very good. I would think of, if you're going to start a small position and have numbers on the downside where you would add, but the whole thing should be like a half a position before you really get fully invested. So you could treat it as with just incremental moves to the upside, and then pullbacks are entries to add to, as long as the 9 is over the 14 and doing well. So we've got a break coming up, final break, and the question came in, for instance, EVC. Was that the one that I was looking at yesterday? Entervision Communications. Oh, that's a communications stock. Leg D. Look at that beautiful leg D. Second leg D. That's another one, just like Rivian had a second leg D. Look. And it went over. This is EVC, trading at 335, up 12 cents.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So a question came in. So let me just clarify. IBIT, I spoke about it. I did it before. The question came in. 2 questions. One was, is IBIT... Where was it? Basil, IRBT appears to be starting a move. Yes, sorry, I didn't see it. Let me just do that. So I've got Jeffrey's financial. It's starting to move up with higher highs and higher lows. Just make sure it's 60.22. 50 under 57, it just stalls. It goes back to the 200-period moving area, and it just gets stuck there. If it's able by Monday or Tuesday of next week to go to the 62.80, 63 area, that's a good sign for Jeffries, but it's really one of the lagging financials. A question came in, IRBT, that's the iRobot. It was doing very nicely. Yeah, it's a leg D. It's doing very nice. This is one I mentioned for subscribers the other day, but we didn't do anything. But it's at $4.83. I think it's moving nicely higher. $4 to 380 is the support, and leg D is in the process. Let me just quickly do this again. IBIT, which is iShares. Yeah, it's just stuck. Already got to a D in this tiny move. No, I need to see 50. I think I said into the 55, 80, 56, 10 area. That would be much, much better. It's not even close to that. It's 52.15. Yeah, it's a problem. It's just stalled. And then NVIDIA is refusing the Blackwell chips were chips were secretly smuggled into China. And then there's another one that says NVIDIA is refusing the chips. Oh, well, we'll let that play out. But in the meantime, before I hand you over to Steve Rhodes, should be a great show with Steve, I just want to mention the question again. Yeah, I agree. IBIT is that's the iShares still. Ethereum is a little bit better, but we'll see what happens over the next 2 days. So if the Dow after 3 o'clock is up over 120 or more, that's really good action. If it's down 150 or more, that's just, you're going to have to wait a little bit before we can rebound. But I saw all the technicals are looking good. That's all I can say. We're still long. We have no